Okay, we're live. Hang tight. Okay, let's get some stuff set up. Let's get a link going. Figure out what we're doing. And all right. Okay, there we go. Cool. Starting to get in the habit of doing these things, and it's actually helping me get some work done. So we're going to keep this train rolling. And the plan for today is I'm just going to do a quick value write-up, just live on the spot. I don't know how this is going to go. I'm going to spend maybe, 45 minutes doing it. It's football on tonight, so we'll watch that. So I'm just going to run through maybe my generic checklist of stuff, start prepping a write-up like I normally would, and then I'll flesh it out, finish it up later, and then actually publish it. So it's like a live on the spot version of doing one of these quick values. So that's the plan. All right. So here's my template. Let's zoom this in a little bit. And man, what can we get done in 45 minutes? So, all right, things to look at. So to do this, let's do a 10K review. I think that's a pretty important piece of the puzzle, right? We'll pull together financial spreadsheet. So I'll pull my summary financial view that I like to look at. I really like to do like a 10-year snapshot, sources and uses of cash. So we'll do that exercise. I think that'll be a good one. Investor presentation / earnings releases. We'll look at a couple of those, maybe some transcripts. I don't know how it'll feel like just having me read stuff live. So I don't know, maybe we'll do some skimming and try and keep it nice and simple. What else should we cover? Maybe we'll look for other write-ups. I know there's a lot of stuff floating around on this one. So that's the plan. We're just going to do a quick value write-up live. We'll go through Pitney Bowes, and those are the things that we're going to look at. 10K, we'll pull together a financial spreadsheet, look at some decks, maybe look at some transcripts, maybe look at some other write-ups and stuff that's out there. Man, I don't know. We'll see if we can get all that done in 45 minutes. So that's the plan. Okay, I really love starting with the spreadsheet. So we're going to start with the spreadsheet. This is my super generic process. It's nothing special, but I'm just going to build this right now because this is where I like to start. I like the ticker financials. I wind up having to spot check the numbers to make sure they're right all the time. They don't always line up, but you get a couple different data sets, which is helpful. Let's zoom this in a little. And you can copy it real nice and neat. And so I'll just pull the financials over from ticker into Google Sheets. If anyone is watching me do this and they have like a super automated, amazing way to just get this, that would be incredible. I would love that. So hit me up if you can automate this part of the process for me. So, okay, now I got a P&L, balance sheet, cash flow, all in one tab. I like to make it super small so that you can't see it, but I can. And cool. So now I got 3 statements. And then usually I'll come from here and I'll just start grabbing the pieces that I think are most important. And I'll build a set of tables. Screen went blank. Hang on. There we go. All right. So then I'll build tables. I really like getting this in like a vertical column view as opposed to this, left to right, up and down nonsense. Ooh, okay, nice. It's got different segments broken out. The segment financials in here, I also love looking at the segment financials. So we'll go to segment reporting, but you can see the segment view is kind of a disaster in ticker. So the data for this isn't it isn't all that helpful anymore. So I usually have to get that straight out of the 10Ks. Okay, so this is good. This is a good enough start. All right, so I can get a revenue picture. Let's zoom this in so you can actually see what's going here. Okay, let's just look at some of this stuff. All right, we got revenue. We got lots of revenue declining. We've got gross margins down, then up. SG&A down. That's good. Operating income down, now up, and pretty stable. That's good. Margins are actually pretty stable over this time period. And what is this, 2016 to today? Interest expense is up a little bit. Not bad. Not bad. And lots of restructuring costs. Lots of restructuring costs. So, okay, that's what we're dealing with. Great. Let's take operating income, revenue. I like to take D&A and add it to the operating income, and I'll let them do all their adjustments for unusual items like restructuring and stuff. So ticker pulls out all the unusual things, like all this insurance stuff, restructuring. I like that. So I get like a true EBIT number for like a cleaner view of the business. It's not always reliable, but if you spot check it, it's pretty accurate 9 times out of 10. Okay, so there's D&A from cash flow, operating income from the P&L, and revenue, right? So now I can get a clean view of EBITDA. And boom, cool. So we're good there. We'll just get rid of that stuff. Okay, so now we have a starting point, right? Now we have a starting point, and we can start pulling some of that in. And cool. All right, now we can get some tables going. And yeah, we're getting in the weeds, so I hope that's okay. I hope that's okay. This is where I like to start, because honestly, I feel like the numbers tell you the story a little bit better than just jumping straight into the narrative. I know a lot of people would probably disagree with that, but that's okay. All right, shares. Cool. Okay, we got that. Cash and debt. Let's do that. That sounds good, right? So we can get cash and let's see, current portion of long-term debt and long-term debt. There's pension and some other stuff, but I'm going to ignore that for now. Let's keep it easy. Keep it nice and easy. There's debt. Okay, and there's cash. Okay, so now we got those. We're just going to get like all the fundamentals in one nice, beautiful table, and then we can look at it. Cash flow, right? Cash flow. And I like to look to see if there's lots of working capital swings going on, and there kind of is here, but it's consistently positive, so we'll leave that alone. Okay, so there's your op cash and capex, acquisitions. Oh man, there's lots of stuff going on in this cash flow statement. Let's see, we got selling stuff in 2 different line items. I don't know why. We'll just call this divestitures. And let's see, sale, divestitures, cool. Let's get the changes in debt. We got that, right? So this is divestitures, this is debt. Pull those over. And what else? We got some buybacks, and we got some dividends, and then a whole bunch of other stuff, right? Just this giant other category, which I hate, but we'll take a look at the 10K buyback later. All right, let's see, capex, acquisitions, cash flow. Cool. Okay, so now we can get 2 tables going. Oh, cool. And we get another one for cash flow. Sweet. Look at that. Oh, it's beautiful. So now in one beautiful view. Let's turn this into a number. Now we can see all the trends going on in this business. Let's see if this will carry down. Cool. And let's put a line there and a line there. Awesome. All right. So this is usually where I start. And then if I'm following a name regularly, I'll just keep adding onto this list and track as long as I can and get a really helpful, beautiful table going that tells me everything I need to know about the company. Oop. All right. So let's take a look at this. We got share count coming down. Nice. We got EBITDA is pretty stable recently. Actually, the trend since 2020 is pretty solid. Let's see if I add. Oh, yeah, it won't let me do that because it's transposed. I could get an EBITDA margin as well. Okay, and actually margins look pretty solid over an even longer time frame, and debt's come down a lot. Let's see. Ooh, what are we doing here? I want this to be that. All right, I'll make that a leverage. Oops, wrong way. Okay, so like 5x levered. That sounds higher than I thought it would be. Maybe that's still too high. Let's see what it is on a debt to free cash basis, which I actually like better as a metric. So like 10x debt to free cash. Does that sound right? Is this like 170 million of free cash annually? And dividends still going on. So this is why I love this view, right? I love this because you can see all the cash generation going back many, many years. I won't include the latest year because this is a TTM number, but now I can get a super clean view. This is a cumulative number here, right? This is whatever that time frame is, 2016 to 2024, all in one view, right? So this is 1.6 billion of free cash generated during that time frame, and of that, $1 billion of it went to debt. 316 million went to buybacks. They sold some stuff to generate some cash, and then they did acquisitions. It really is just one acquisition. I mean, the rest of this is pretty inconsequential. So you can just get a really clean view of how capital allocation is changing from year to year or from the whole time period. So, okay, so acquisitions are now done, right? They haven't done any of that in a while. Like even this stuff, I would consider that inconsequential. They sold some stuff. All the money has gone into the debt. Wow. Yeah, just a massive amount of debt repay in the last couple of years. 2 billion, if this is all accurate. Some of you may know the story better than I do. And all right. Oops. And let's see. Free cash flow is stable to increasing. Oops. At $1 a share, does that sound right? Does $1 a share free cash sound about accurate for this name? Oh, wow, and it's grown a lot over the last couple of years. So this is our free cash flow per share metric. All right, cool. So I got a baseline now. I got some tables that I can refer back to, and eventually I'll clean these up to find like whatever the 2 or 3 most important variables are, and I'll drop that into there. So we've basically roughed this out. Check. 10K. Oh man, I can't just read this thing while people are watching me. That's kind of weird. But we can look at a couple of things. So I know they have 2 segments. I have done zero work on this name in like 10 years. So you'll have to bear with me, and my knowledge of it is pretty ancient. Okay. So normally I would read through the business section. Actually, let's see, Pitney Bowes Investor Relations. Let's see if they've got a helpful presentation that would outline the story. Help shortcut the reading exercise for now. Not to say that I don't want to read it or wouldn't, but okay. Is that going to be my best bet? Let's see. Do they not have like a drop-down menu? Oh, here we go. Oh my gosh. Let's see. Okay, I guess this is it. It's just like a single page. I like to find an old investor presentation that's like an analyst day or something that goes a little deeper. I think this is old. This isn't the CEO anymore, right? PBI CEO, May 2025. That's right. Okay. See, I guess I've been following at least some of the Twitter trends. Okay. So that's where they've been. Earnings almost nothing to pretty significant, and it's a $12 stock, right? And revenue's down in that segment. Margins are excellent in that segment. Oh, that's right. They've got the bank, and I don't know how that shows up on the surface of the financial statements. That'll be interesting. Let's see. Well, let's have that up and running. Come on, let me click that. Okay, cool. So here's all your bank receivable, your bank, right? And then there's deposits. Okay. Okay, and then you got long-term. And there's your non-current deposits. Okay, interesting. That's pretty cool to have that. All right. Pre-sort, oh, that's right. They do the services for the post office. Wow, and that business is actually doing pretty well, it looks like. Can they really get this thing back to revenue growth? Let's see. What are the more recent revenue growth trends here? What are we looking at? Why is this giving us weird data? There we go. All right. Come on. Can't wait. We're hopping around too much lately. All right, there's some disc ops here. Is there still stuff left to sell? All right, I need a notes section. All right, how to evaluate the bank inside PBI. There's receivables plus deposits. Could probably look at that over time as well, and I wonder what picture that would reveal. Let's see. Negative total equity. I don't know how much to read into that because this company's been through a lot over the years, so that might not be all that meaningful. Let's see. Why is this? Recent revenue growth trends. Is this business growing? Isn't this still like a melting ice cube type business? Tied to just overall postal volume. At least that was my initial impression of it. Okay, that's interesting. Increasing the amount of capital, consumer returns. So, share repurchase, 150 million. What's the market cap on this thing? Gotta get that transcript up and running. We're running out of time already. Wow, it's really hard to look at a stock in 30 minutes. 2 billion. All right, 2.1 billion market cap. 2.1 billion market cap, 150 buyback authorization. And this is old. I don't know if this is actually where they're at now. Goal is to reduce leverage to 3x over 24 months and return capital. So capital allocation equals reduce leverage 3x over 24 months. That was as of May. I don't know if that's still accurate. And then I think they've already announced a buyback, right? So it's going to be in tandem with, not while they're waiting for it. Okay, let's see. Earnings presentation. There's almost a 0% chance that I'm going to uncover something new that anyone who's been following this name for a long time hasn't already looked at least today. Okay, bank deposits. Yeah, so if that's how do we bank inside? What are deposit trends over the last few Qs and last few years? I'd be interested to see if that's like a source of cash or a use of cash recently. Net finance in the quarter, 1.15 billion. Okay. So that global financial services, that's within their SendTech business, which is probably why the margins are huge in that particular segment, right? This is the pre-sort segment. It's a 2-segment business. Oh, we always have to start with the segment reporting. Oh, don't tell me it's segment information. No, it is. There it is. Okay, so 2 segments, pre-sort and SendTech. And okay, they do give us some data. All right, so the margins have to be this high in the SendTech because of the bank. And then this business, maybe this is all COVID related. Well, I don't know. The revenue really isn't all that different. So margins have exploded there. All right, segment. Getting our notes all messed up here. Segment review. Why have margins increased so much to 2024 in pre-sort segment? Okay. This is just like my own list of things that are interesting or things that I would want to go deeper on as I keep unpacking this thing. So, okay. So flat trend, earnings are up, revenue is up in pre-sort, but this is the Q or the K, and that's pretty stale at this point. So information, cool. So 3-month trend down. That segment's still up this quarter, up last quarter. So pre-sort, so far, pre-sort equals growing, and SendTech equals declining, but highest margin segment by a lot, right? But this one is, well, earnings are still growing like pretty significantly, right? 90 million versus 67. So on top of 165 million, that's a huge pickup. Wow. The pre-sort business is doing really well lately. I wish I could go back like 10 years and get segment financials out of a single, I don't have a Bloomberg terminal, but that'd be really helpful. Okay, so even the most recent quarterly trends are pretty solid at the pre-sort business. Okay, this is the Q2 deck now. This is the Q2. I know I'm hopping all over the place. I get too excited about it. All right. Yeah, what are they guiding to? Here's guidance for the full year. Whoa, free cash flow 330 to 370? What? Is that right? What was it last year? How do they define it? Anyway, we'll come back to that. That just seems like a huge number unless there's working capital swings in that. That's the whole deck. That's all we get. Okay, so 1.9 to 1.95 billion of revenue compared to 1.9. Okay, so still declining, but it looks like the mix shift is still taking place within those segments. Let's see what they define. How do I get older? Oh, do I just click that? There you go. This is a really crummy IR website. There we go. Okay, here's the last year earnings release. What was free cash flow last year? It was 290. This was 290 million. Excludes 86 million of restructuring. So really it was 200, which doesn't really jive with what Ticker was showing me. Let's see. There we go. Okay. Disc ops. What is in that? Is that gone yet? Let's see. Okay, I guess it must be gone now. Continued. What was it? I qualify. Oh, was that business they bought? Was that this? No, no. I appreciate the comment. I have literally done zero work on this. None, zero. I'm like totally fresh. Have not looked at the name at all. So you're watching me like uncover everything for the first time. Okay, so they did a big acquisition. So yeah, feel free to sprinkle notes in while I'm looking at it. So 2017 acquisition, 480 million. Is this disc ops last few years? So it looks like they did a really prior management did a really bad acquisition back here, and now they're unloading it. Now it's gone, and you're getting like the slingshot free cash flow earnings movement, but still 290 million. That must exclude the disc ops stuff, right? Let's get the calculator out. 276 minus, oh, they got all sorts of weird stuff in there. Cash flow statement. Oh my gosh. Oh my gosh. It's not that easy. Okay, well, there's CapEx. Okay, so yeah, that plus 86, that gets you to the number that they're quoting. But then all this stuff is probably real. Net investment in loans. Okay, so that's their finance segment. Ooh, that's murky. Oh man, so Ticker really isn't going to help a whole lot in looking at. Oh no, that was the one I wanted, that quarterly trend. It's gone. It's all right. Okay, so this is a pretty confusing cash flow statement. So you really would want to like plot this thing out and have the swings in the bank balance in there. Okay, so this table that I created then, especially with the EBITDA number might be close-ish. It just won't have all the adjustments that they had. Full year, so they said 442. And my little table had 376, so pretty far off. But free cash, I had it at 172, which included the disc ops stuff. That's the big swing factor there. And they call it 200 million. So that's a huge increase. But my question is, if this is 330 to 370 million, will there be any uses of cash in other areas of their cash flow statement? Free cash flow was 200 million in 2024, guiding 330, 370 million in 2025. But other investing cash flows, what are our sources / uses there? Okay. Okay, so the GEC business, that must have been the deal they did in 2017. Cool. Okay. Let's see. And what was the EBITDA guide for this year? Okay, so EBITDA is growing. So EBITDA is growing, earnings are growing, and free cash are all growing in 25 compared to 2024, which is pretty solid. Okay. Let's get some charts in here so I can come back to these later. So the free cash flow is 350 million. Cool. That's helpful. That's helpful. Do you know if any of this other stuff, like what's the trend in the receivable balances from the bank? So the deposits, customer deposits sit in financing cash flows, and then the loan investments. So the loan receivable side is flowing through investing cash flows, and the deposits are flowing through financing cash flows. So technically you still need to bake that stuff in. Let's see, loan receivables flow through investing cash flows, and customer deposits cash flows. So really, I think if you wanted to get the cleanest picture of true free cash, wouldn't you want to net all three of those pieces? Your op cash flow, your CapEx, your loan receivable net change, and your customer deposit net change. Let's see. All right, I just want to see what they look like in the. Okay, so customer deposits, see, it was an outflow of $43 million in the first half of 25, and loans were a $62 million, so $100 million outflow for loans and deposits. And then no disc ops. So disc ops is all gone. I don't know if the sales maturity of investment securities, is that tied to the bank at all? No, that just must be like their own marketable securities line. Okay, yeah, okay. So it's a tiny balance. Doesn't really mean anything. Interesting. Yeah, I really would want to plot that. So now I'm going to come back here because I want to, this is the table that I want to build, which would be loan receivables and customer deposits, right? Let's see. Can I spend a minute to do that? Will that be too boring? Let's see. So, but I need some dates. Sorry. All right. So this is 2Q25. So we've got 506. We'll just call this 507. I like to round. So 5.6. Okay, so that's the short-term side. Long-term side, I've got 638.6 and 610.3. I would love to go get these balances going back 10 years. I know that sounds tedious, but I feel like that'd be really helpful to see that picture. I'm just gonna call this 52. So there's two, there's short-term and long-term. Okay. 645.9 and 57.9. I'll just call it 58. Okay. Let's at least go get the last couple of years, and then we can see what. Oh man, that's right. I won't get the full year. Okay. 563.5. I wish they required you to have 3 years of income statement and 3 years of balance sheet. I feel like I get shortchanged. All right. And let's see. 640.3 plus 74. Okay. So let's see. We got deposits coming down. We got loans coming down, but pretty unchanged loan balance from the end of the year to the first half of the year. Come on. There we go. Let's get one more K. Yeah, I did see someone tweet that the whole 7% net interest margin, which is pretty fascinating, right? But the challenge to that is it, if Centec is the declining more declining piece of the business, then is the loan book like basically in runoff? That'd be my question. So 22, 21. Okay, we'll get these 2 years and then we'll pause and then we'll reflect on whatever we're looking at. 564 and 27.124. Okay, maybe it's not declining as much as I thought. Plus 587.4. Sorry, I'm not fast with these. 628.1 and come on, where's your non-current? Oh, geez, really? Do they used to bury the non-current portion of deposits? I hope that's not the case. That's super annoying if they are. Oh, man. Oops. Customer deposits. Let's see. Huh. No. They're not going to give that to me. Okay. So I don't know if these are accurate then. That's a question mark. I'd have to dig deeper into that. Okay. So first glance, it's maybe not falling that hard. That actually looks pretty stable. So maybe the loan book is fairly clean. And then the deposits, at least for the last few years, are declining. These are questionable because I don't know if we can't see non-current deposits. So this would be one of those great like charts if they put it in an investor presentation. Okay. Let's see. I had that somewhere else. Aha, yes. Check long-term, like 10-year trends for loan receivable balances and customer deposit balances. Cool. We'll do that later. I won't make you go through that whole process of tallying those up, but I do think that's an interesting exercise. Okay, one more thing I want to look at. I just want to get an older 10K. I just want to see these segment trends a few further years back. So there's your pre-sort, and there's your pre-sort EBIT. So, oh, and okay, so that's the business you were talking about that they just sold, the GEC, Global E-commerce. Man, what a dog of a business, dude. Holy crap. Okay, but the Sendtech does not look promising, right? 440 million back in 2020, and in 2024, it's where is it? Yeah, I guess it's pretty stable now. It's a couple of years of being stable, but still, it's like risky or murky, whatever you want to call it. And then there's some debt on top of it. And I'm assuming they don't consider the deposits debt, but that's fair because they have more loans than they do deposits. So like there's equity in the bank, it looks like. Equity balance. Yeah, it definitely looks like they held on to it for too long, for sure. Okay, what are the recent revenue? Oh, we already looked at the revenue growth trends. So pre-sort looks like it's growing. So is the whole thesis basically like you milk the cash flow? I don't know what the long-term outlook for the pre-sort business looks like, but the trends, at least for several years, look pretty solid, maybe even longer than a few years. And it's getting better. So if this is the crown jewel, right? Kind of looks like that. Growing, margins expanding, etc. And I don't know if they give us a do we get a CapEx number for each of these, right? Like, that'd be pretty cool. We get a DNA. Oh, cool, we do. Sweet. Yeah, so it's pretty, well, both of them are not that capital intensive, honestly. But it's better. It's less capital intensive than Centech is, for sure, even with the bank in there. 44 million on 400 million of EBIT versus 11 million on, it's close to what, 200 million almost of EBIT in that business now. So that's pretty solid setup. Almost no assets. Granted, this has a bank inside of it, so it's not totally fair. And asset light / minimal CapEx. So we've been looking at this, for like 40 minutes now, maybe less than that. And my like general off the cuff conclusion is milk the Centech business for cash flow, right? Slow decline, but which is risky, right? I mean, I don't think you could ever put a big multiple on this thing because, that could change course, right? It's pretty hard to predict what a decline rate is going to look like 3, 4, 5 years from now. But Presort is growing revenue and earnings. And my guess is, if, again, zero qualitative work or like analysis on the actual business, but if the outlook were good there, then that would probably be pretty high multiple business, right? I mean, just based on even the few years of trends here, like, and in the first half of this year, you got 10% revenue growth over 3 years, and you've got margins up, and this is just your segment EBIT doubled. And then those trends are more or less holding constant. I mean, growth is slow, but it's positive, and you still have pretty significant margin expansion. Like, I mean, that's pretty impressive, honestly. So if the outlook is good there, then, I don't see why that couldn't be a 10x EBIT business or better potentially. Okay, milk Centech, and then thread needle on debt, right? Because it's still pretty levered. What did they say it was? They said the EBITDA guide for the year was, call it 460. And what's your net debt? Let's see. Oh gosh. So you got 300 million of cash. I'm going to ignore the finance stuff for a moment. You got 300 million of cash. I don't see any long-term investment stuff. And then debt is 1.9 and 15. So yeah, I call it 1.9. So let's see. General thesis. These are scratch notes for now. We'll clean it up later. Some financial stats. Balance sheet has 1.9 billion gross debt and 300 million cash. Hopefully that sounds right. 1.6 billion net equals, what is that? 1,600 on 450. Oh, okay, that's not that bad. 3.6 leverage on 450. 460 million EBITDA. And that's the fiscal 25 guide. Or 1,600 on 350 of free cash. So that's actually really clean for 4.6x leverage on 350 million free cash. But I don't like their free cash definition for now. CEO has 100% of his net worth invested. Oh man, that's actually pretty wild. What's the insider buying look like on this thing? if anyone on here, I didn't do this last time I did one of these calls. Oh man, it's gonna make me watch an ad. If you're on Twitter, you gotta tell me your Twitter handle so I recognize people from there. So if you're on Twitter and you're dropping a chat, you gotta tell me what your Twitter handle is, just so I know. Okay, so that's the balance sheet. Share count. 172 million. They got a buyback in place, right? 172 million shares out times 12 equals, sorry, I have to use a calculator. We'll call it 2.1 billion market cap. Or what is that? That's a 3.7 billion enterprise value. Now the question is, how do you treat the equity in the bank here, right? Because if the bank is contributing to that EBITDA and contributing to that free cash flow, you don't want to double count the value here, but you also don't want to ignore the potential asset value either. So yeah, do you net that out? Is that how people are treating that? Do we net down leverage for bank equity, right? Because I mean, if the CEO is looking at this thing and he's saying to himself, hey, we got a couple $100 million of equity in this thing, right? Yeah, I don't know. It's not insignificant. Okay, fiscal 25 guide, 1.9 billion revenue, which is down small amount. What was that? It's like down 3 to 4%. 24. But pre-sort is growing. I think that's really fascinating. 465 million EBITDA, 330, 370 million free cash flow. Likely excludes receivable / deposit activity. Okay, so that's our guide. So if you just took it at face value, then you're probably looking at it and saying, wow, it's trading at 6 times free cash, which, right, on the surface, trading at 6x free cash. And that's just the 2.1 billion divided by 350 million free cash, right? I think that's probably missing a couple pieces to it, right? Your largest segment's declining. I don't know have they given a segment guide for the year? Like, or do they give us segment EBITDA numbers? I guess you could back into it with, with what they've got in. Oh yeah. Oh no, I guess not. Oh yeah. Okay, there it is. Pre-sort, provide services, qualify for USPS workshare discounts. Got it. Okay. So there's your segment EBITDA. So yeah, okay, that's a pretty solid quarter for that business. Man, I could have just started here. And this business grew EBITDA in the quarter, but revenue is down. Interesting. Simplification, cost reduction. Okay, so they're taking some cost out of the business. Okay. Nope, I don't want that. On debt, plow free cash into buybacks after leverage target. All right, what's the CEO saying? What are they working on? Okay. Oh man, this is gonna take forever to read this. Can we just cheat and like do ChatGPT highlights? All right, we'll let that process for a moment. We'll see what it comes back with. Okay, So I think I'm getting the picture here. I think I'm still missing a whole bunch of pieces, and I've done zero work still on like the actual company itself and what they do and like the qualitative aspects of the company. So I'd like to look into that, but I'd be curious to know how much of that 350 million is potentially earmarked to go toward the bank, right? Either funding new loan growth or repaying customer deposits. So I think that's a very real number. And so if it's like $100 million, right, which it very well could be, because in the last few years, cash flows. Okay, so here's your loan growth, right? 50 million, 30 million, 10 million. And then here's your deposits. Oh man, inflows and then small outflows. So pretty all over the place. Not even really a reliable trend, honestly. No, you did not miss PVI. We're knee deep. We're knee deep. I'm realizing it's really hard to look at this thing in less than an hour. Okay. So, okay, there's your loan. So, okay, the loans and the deposits outflow of 100 million so far in the first half of 2025. So if your free cash guide is 350 million bucks, let's just say hypothetically 350 million bucks, and 100 million of that goes to the loan growth and deposit funding, then really your free cash 250 million. So you're maybe trading closer to 10x free cash at the end of the day, or like that's all you've got from a discretionary standpoint. But maybe they commented on that in the quarter. Let's just see what ChatGPT says is going on here. They got a new CFO. Oh man, this is pretty cool. Okay, private management let at-risk customer walk. Unforced error. Tracing percentage more for higher EBIT dollars. Low cost fastest operator. Oh, okay, interesting. They can do M&A in that area. So there's core shipping SaaS from non-core. Oh, interesting. So there's a SaaS component within SendTech as well, but is it tied to the equipment piece? If I remember, there's an equipment piece of it. 3x leverage could go higher for creative deals buybacks, but okay, interesting. So really, the CEO is not afraid to ratchet up the leverage. Like the 3x almost sounds like it's even a loose target at this point. Okay, revenue guide tightened. Whoa, buyback authorization lifted to 400 million. Nearly finished 150 million. Was that during the quarter? Okay. All right. More notes needed. All right. Capital allocation. So that is a stale note as of 1H25. Almost exhausted 150 million authorization. Increased to 400 million. Is that incremental, by the way? 400 million? Of course, those words are not mentioned. Let's see. Earnings release. So net, there's like 270 left. So increase to 240 million, so 270 million left. What else? Leverage is less than 3x now. Baskets of revenue, okay. To set up internal improvements, broader review, and emphasis on operational efficiency before. Okay. Study capital light options. What's the Harley Davidson analogy here? What could they possibly do with the bank to unlock value there? Similar opportunity unlock value in the same way from, okay. Interesting. Okay. So looking at ways to unlock value within PB Bank. Analogy to parlay. Okay, cool. Okay, wow. So I've got some notes. I kind of looked at the 10K, mostly just the segment stuff. Mostly just segment reporting for now. I pulled together some financials, but the data from Ticker is really, it's pretty unreliable. Just, I feel like this is the kind of name where you could actually find the mispricing because the optics are so different, right? Like you dig beneath the surface and you get totally different numbers. And the disc ops thing. Oh yeah. I gotta add that note. Let's see. 20 acquisition. Okay, here it is. Disc ops. And look at this. We've learned some stuff along the way. General e-commerce, is that it? Is that what it's called? Or global e-commerce. I was gonna say, what a terrible name for a business. GC. Significant losses past few years. Now exited. Cool. So the stock is up, but really they've done like the heaviest of the heavy lifting. So now it's like clean up, tighten screws, deploy cash, and you're off and running, right? And the CEO, he's been there since management. CEO took over in, when was that? Kurt Wolf, BBI. Let's see. CEO. Okay. Just says board of directors, our company. All right. When did he take over? Oh, May. Okay. So you got a new guy. So you got a management change. Kurt became CEO this year. Cool. So it's interesting. It's like, I like to think about like a theme that ideas fall into, right? Like, is it a spin? Is it a post reorg? Is it a whatever? You know, what category does it fit? It's almost like a combination of like a management change / turnaround / like something else even, right? Like almost like a public LBO type model because they've repaid so much debt. I mean, really, they've actually done a nice job of chipping away at the debt and like keeping earnings pretty steady. Again, I don't know how reliable this data is, but they're definitely making some progress, especially if you strip out the numbers from that underperforming segment the last few years. Okay, so here's where I'm going to leave it. I still need to evaluate business, right? Like the qualitative stuff. I did not do that because I can't just read about it like with people watching. I still want to really unpack the bank inside of this. I think what I'm going to do is chart the receivables and deposits over time, going back like 10 years. We'll call this bank equity. So I think this is the view that I want to get so that I can see what the trends look like specifically for the bank. But it looks pretty stable the last 3 years. Yeah, it doesn't look like it's falling off a cliff, although the customer deposits are flowing out pretty quickly. So I want to look at the bank, especially the recalc free cash flow with, let's see, loan / deposit flows. So I just want to get like a free cash flow number and then like an adjusted free cash flow number for the bank activity, you know? So let's see, free cash flow with bank activity. Placeholder. That'll be a placeholder. right? So then you can see like how much cash do they actually have available after they fund deposit flows and fund loan growth. Like that'd be interesting to know. So that's the bank. I still don't know how to incorporate that into the valuation for the company, right? Like, do you incorporate it with your enterprise value calculation? Do you tack on the equity balance? Like, what's the most appropriate way to place that? This is just a note. It doesn't mean anything. Revenue growth. I think I've got this answered. Presort equals yes. Centech equals no. So hopefully it's not one of those like crossover inflection stories where you're like waiting for the growth business to overtake, because this is still pretty small compared to this segment. And then I wonder, no, never mind. That was, transient thought. Capital allocation. It sounds like the new CEO has maybe a different take than the old deck that was in there. Maybe it sounds like more aggressive buybacks are really the plan. Is that fair? Aggressive buybacks are primary focus here. I don't think they've really done any meaningful M&A recently, but it sounds like he's talking about it. 2.2 million is pretty small, even for a company of this size. So, maybe M&A, maybe deleverage, but much less so. So it sounds like buybacks are definitely the focus here. The segments, I want to better understand this, but it seems like Presort is the crown jewel, right? It's got revenue growth and earnings growth pretty significantly, even through the second quarter this year. And if they're commenting that, what do you say? Unforced error. Like if that's the term they're using and it's still doing what it's doing, like, man, maybe there's even more meat on the bone there. So that sounds like the crown jewel of the business and probably the most valuable asset. Centech is declining. Whoa, Centech is declining, but it seems well managed. Highest margin segment, but seems well managed for now, which is good, right? So fuel the cash into Presort and into buybacks, because it doesn't even seem like this business needs a whole lot of CapEx anyway. Disc ops, I don't know that there's much to unpack here, but it really helps clarify. Like, I mean, the cash flow statement looks pretty. Look at this. These are the disc ops cash flows, right? It's like $350 million over the last 3 years of cash flows tied to that disc ops business. So that was a pretty big drag. Free cash flow was $200 million in 24. They're guiding to 350 in 2025. Oops. Hang on. Oh, whoa. Pull that back. There we go. How much working capital flux in that guide? Yeah, just curious if that is some working capital release or if it's like a true free cash number. What is that number on a per share basis, by the way? 370, 172, $2. So, okay, that's helpful. Loan receivables are going through investing cash flows. Customer deposits are going through financing cash flows. So it's probably pretty easy to get a murky look at true free cash or operating cash. They're looking at ways to unlock value in the PB bank. So I think that's where I'm like, man, how do you add the value, add that into the valuation? That's pretty interesting. And then you've got a pretty significant management change situation going on here. So that's the story in a nutshell. That's where I'm leaving it. It looks like a milk the cash flow from this one segment, stabilize it, keep the decline rate nice and slow, funnel that into growing Presort business, plow all the cash back into buybacks, probably even keep the leverage target. If they're saying it's already at 3x, then just keep it neutral. Interesting. So if you project this thing out a couple of years, which, let's see, forecast earnings a few years out, then, man, it'd be possible to have a pretty significant number, right? If you wind up taking, well, that's the thing, right? What's the deposit balance? What's the loan growth balance going to look like over over a 3-year time frame, but I don't want to just say, hey, there's gonna be $1 billion of free cash over the next 3 years. But if there is, then that's interesting. Mentioned X might go private. Yeah, that'd be fascinating if they did that. It would be a pretty small equity check based on the debt balance today, right? So, get it now before forecasting is 4 years out. Good buybacks add to EPS for this business. Yeah, interesting. All right, I was a skeptic. It's actually pretty interesting, even though it's had a really pretty solid run. Wow, damn, yeah. Even in the last, I guess, just over the last month or so, it's been pretty flat. But other than that, like, it's been a pretty solid run. Interesting. Not on a max view though. Yeah, still lots of way to go, right? Interesting. All right. I'm going to clean this up, finish this up, and then publish this as like a real post, but I won't make you watch me read a 10K and other documents. So did I at least get it like kind of right? Like, am I at least like in the right territory on this thing? Yeah, cool. Sounds good. All right. Thanks for the help. Hopefully I didn't miss the mark too bad on this one. We'll do this again. Appreciate you.